I would say you're going out on a limb, but you also raised the price target. So tell me what's going on.
Yeah, Kelly, thanks for having me. So the price target raise is a reflection of us just rolling our estimates out to fiscal 25. And so it really just more than anything captures a little bit of better earnings growth in the out year than where we are today. But net, we still think the business near term and the intermediate term is really what clients and investors should be focused on. And we can go into the details, but we think that's slowing a little bit more than most investors are expecting at this point.
Why is that? Post-pandemic, I thought, don't they have like a big anniversary iPhone coming? You say that that the purchase intent has discernibly softened over the past 6 months.
That's a great question. So every 6 months, my team in the U.S. and Asia, we do a survey of over 7,000 iPhone users. And it's been reasonably predictive in terms of determining consumer purchase behavior. And so in the most recent survey that we just published late last week, in basically every market, it downticked relative to 6 months ago. Some of that is due to a little bit of a hangover from pandemic spending that we saw flow through the iPhone model as well as other markets with that Apple controls. But also what we're seeing also from the supply chain is, it sounds like Apple is communicating to their suppliers that demand's going to be a little bit softer in the back half of this year, to the point where we think iPhone builds, which are the construction device, the devices under construction, are going to be down, 8-9% in the second half versus the second half last year. So at least Apple is telling the supply chain or signaling to the supply chain that demand's going to be a little bit softer. And I think some of that is macro related, and more the developed markets. Market share is incredibly high right now for Apple. They've done a great job the last 2+ years, and we think that share gains are going to be more difficult to come by going forward.
David, it's Steve. I want to talk about services because that's another part you talk about in this note, it directly tying it to these weakness in iPhone sales. But also just, zooming out a little bit, this used to be a segment that would grow double-digit percentages, quarter after quarter after quarter. That's kind of gone away. Is that behind it now? Is Apple never going to see that kind of growth in services again? What should we expect there? Or are there other areas where they can kind of squeeze growth out of services, even with slowing iPhone sales?
Yeah, it's a great question, Steve. So a couple of things. One, you nailed it, right? Services driven by the App Store, iCloud, some of the other ancillary tack-on businesses were incredibly strong for the years prior to COVID and during COVID. But I think to some degree what you saw post-COVID is now a little bit of a hangover where consumers are focused on experience rather than sitting at home and using their iPhone to download movies and video games. In addition, the base, I think as people have rightly called out, is not expanding as fast as it once did because the overall spending on iPhones has been slower. So when you look at App Store, which we think is a critical driver, which is about 20% of the business, growth has slowed from, 15 to 20% on a year-over-year basis to what we think is kind of flattish year-to-date through May. So we think that's a bit of a headwind. And some of the other ancillary services like iCloud, the warranty business, Apple Care and Apple Care Plus are tied to the base. So we think that growth is going to be much slower going forward relative to history as well.
Steve, I'm going to ask you a question.
Sure.
Give us some context and the significance around some of what Dave's saying here.
Yeah, so one of the stories Apple is trying to tell, they started really telling this 2 quarters ago during earnings, and especially last quarter. Look at these emerging markets. Look at India. Look at South Asia, Indonesia, Vietnam. We're growing there. We're taking market share away from Android. But what was interesting about this note from David here is it's just not enough because the real money-making countries are China, United States, Europe, Japan, and so forth. And the slowdown there is not enough to make up for it. And I guess my question for David here would be, is Apple talking too much about these emerging markets and not enough about what they're doing in those other regions where they actually sell the phones?
Look, that's a great question. Clearly they're seeing very strong demand in these emerging markets. But as we pointed out in the note, and there's a lot of information there, India, for example, is only 3% of total iPhone sales. And more importantly, if you look at the demographic within India, only about 5% to 6% of phones sell for more than $600. So that's an incredibly difficult market for Apple to crack when, quite frankly, the GDP per capita is a little bit different than China. So people that are expecting that market to replicate what's going on in China, I think might be a little bit disappointed. That said, look, at the end of the day, the share gains in the U.S. and in China to a lesser degree are probably over for Apple. If you look in the U.S., their shares are over 50% on a unit basis. It's really tough to see that going much higher, and particularly when the unit market isn't growing that fast in the U.S. So I think, Apple has a lot of heavy lifting to do in these developed markets. Emerging growth will be a good market for them, but it's not enough to really drive the overall growth back to high single digits or even double digits for this business.
David, quick question. You say, U.S., China, Europe. That's where maybe we're concerned about this demand softening. Where is it the softest?
So, for example, in the month of April, just from a sell-through perspective, Apple reports revenue on a sell-in, but sell-in is really an indication of demand. Overall market was down about 5%. The U.S. was down 20% on a sell-through basis.
Wow.
So consumers aren't really purchasing devices. And to be fair, the U.S. has been heavily subsidized by the carriers, right? T-Mobile, Verizon, and AT&T. So without, a significant change in incentives or more aggressive deals, you're not going to see an uptick, we think, in the fall of this year when the iPhone 15 is announced. So, weakness is pretty pervasive.